Good morning, this is Data Trader Pro. This is Thursday, April 6th, about 8:15 in the morning, pre-market. I just wanted to go over what happened yesterday and some of the tells that we saw, and quickly talk about the volatility space and block trades. So I'll try and keep this brief as a pre-market wrap. Okay, so everybody knows we've been in a bull rally that's been extremely stubborn in terms of resisting any drops to the downside. Everything is, as we know the phrase, BTFD, up. Every little drop is bought, and there have been no down moves that have been sustained for a long time, since the election. Really, election night was the last big drop we had. We've been in a period of protracted low volatility since, back to historic low volatility levels that we haven't seen since the 90s. VIX in the 10s, etc. So that's the background for where we've been. And we'll talk a little bit more about market risk, but in a moment when we talk about VIX. But what I really want to point out is, in the internal space, what's been happening is we've had rallies on fairly flat internals, and we did have a correction recently. We had quite a long correction in terms of time, not a massive correction in terms of price, but a fairly decent correction in terms of time. And roughly 80 points, I think 82 points in the futures, off of the all-time high on the the S&P 500 E-mini futures. So we've taken about a month to actually correct off the all-time high, but we really haven't had any kind of panic drops, and the volatility space has stayed low throughout the correction. What's been interesting to me, though, is that breadth peaked around our all-time high, and has had, even on rally days, has had very muted highs. So yesterday we actually started off with a very bullish position. The advanced decline delineators were 3, 4, and in terms of the Russell, almost 8 to 1. A very bullish looking open. Had all the hallmarks of a bullish trend day, what we call a bullish trend day. You'll see on our trend page we have a day type indicator. It measures key market internals between the open and 10:15, then makes a reading for the day, whether it's likely to be a neutral range day, which make up 70 to 80% of the days, or a bullish or a bearish trend day. It just missed. This is today's reading, so these are yesterday's internals, but today's reading, since this is set on a timer. Yesterday was a neutral range day, despite the pop, so there's a little bit of an early warning there that we might get a reversal back down into range. But the big thing was that most of these days, even on rally days, we've been flat internals, sometimes even slightly negative on internals while the market's rallying. That's not a healthy sign, folks. Not a good sign. Now, I expected the rally to be reaching a conclusion, the correction reaching a conclusion at the last day or two, and I thought we'd have a rally phase, which we did indeed start yesterday, and we hit ES target at 23.75 to the tick, which was part wisdom and part lucky guess, I suppose. And from there we immediately turned down. The Russell breadth was the first one to go, and when you get, I noted in the room, when you get a reversal from this level of bullish, when they're buying 8 stocks to every one that's selling, and then you get a full reversal to a quite bearish scenario, that is not healthy. And the Russell was the first one to go. It led down, and everything else started selling off. Now, obviously, yesterday was a FOMC release. We had the Fed minutes. They were talking about they're liquidating some of their balance sheet and further rate hikes and all that kind of stuff. I think the market's in a little bit of a wasn't really ready for the balance sheet announcement, and like anything unexpected, repricing comes quickly. So I'll just leave it at that. Okay, so the story has been with breadth, that breadth has been low on rallies, and that's not a great sign. ES, the SPX, SPY, that S&P 500 space has been very slow to come back, unlike other rallies and corrections, has been very slow to come back to its all-time high, and hasn't approached it. It actually came only within about 25 or 26 points of its all-time high on our high yesterday, and then it immediately dropped back. So S&P is struggling, folks. NASDAQ, on the other hand, is on a tear, and was making new all-time highs every couple of days. Not really caring where the other space goes, but that, you know, in a funny contrarian way, that's kind of also a sign that, you know, those are the momentum tech stocks, the really big, you know, high cap, really popular trading stocks that, you know, a lot of funds and a lot of retail traders are pushing money into. And, you know, really, when you see the advanced declines down, you know that they're only pushing a few stocks. So when you go look at the difference between the NASDAQ combined advanced decline and, say, you know, the, you know, we've got a page, you know, you can look at the advanced decline. You can look at the internals just for the NASDAQ 100, and, you know, and they might be down more or they might be up more. Usually on a rally day, these will be up more, but then the rest of the NASDAQ will be flat. So it's another way to look at the market. We've got, you know, each major index, we have our own intraday dashboard for, so you can, if you're trading those, if you're trading QQQ options or QQQ ETF directly, or NQ futures or what have you, these are very handy pages to have, because they have their own volatility index, they have their own, you know, tick gauge, a net tick accumulator, and then the internals, as well as the trading signal. So these can be very helpful intraday. Anyway, I'm going slightly off topic. Okay, so the picture is breadth has not been great, although volatility has been muted. So we've had a very mixed bag picture of what's going on under the hood. Okay, let me go on to talk about, I'll show you the trend page very briefly, because this leads into what happened. Okay, so we had a very, you know, trendy day with the dollar weighted buying pressure, which is our own dollar weighted net volume index of our own index of key market moving stocks. This is a Data Trader Pro exclusive. It's proprietary internals gauge, and that trended up, and then, you know, afternoon it peaked with the FOMC stuff, and then it fell on its face. And it's very rare you go from this bullish a condition to negative. So that was our full reversal. Also, you know, what we tend to look for early in the day on a trend day is the MCCR version of the McClellan oscillator. It's an intraday version of the McClellan. It's NASDAQ and NYSE combined, unlike the original McClellan. And it's a much faster moving intraday version of the McClellan. So we look for the first few candles. If they're in the 100 range on our gauge, by our measurement, you know, it's probably going to be a bullish day, at least for the first half of day off open, and we look for longs when that happened. And that happened yesterday, but it came down midday, came up to a lower high, and then that was it, went negative. So with everything after FOMC. But actually, if you look at the decline, you know, FOMC release was at 2 p.m. The decline, you know, the lower high was at 1 p.m. And so a good hour before they were selling stocks out of this. So you know, the internals are important, and I think not enough people pay attention to them. So they can give you a lot of clues, at least, you know, sometimes a couple hours ahead of what's actually going to happen. Like the turn in Russell was well ahead of what happened in NYSE and NASDAQ, and certainly the S&P and NASDAQ stayed high for quite a while after this. So, but when this stayed low and volatility made a bottom and started rising, that was your clue. Okay, so VIX indices. This is not yesterday's. This is this is today. Well, some of it's a mixed bag. This is today's reading, really. So we're down slightly because in the morning we've rallied back up in futures. So this is pre-market. So not too much to look at right here. But anyway, the point of looking at this page is that a move up in VXST, which is the short-term 9-day version of the VIX, will lead, if it's strong enough, will lead to a move in the VIX, which is what happened yesterday. So we had a strong move up in VXST, led to a pretty strong move up in VIX. Okay, so we watch these gauges. There's 9-day volatility, 30-day volatility, and 3-month volatility. Okay. All right. One thing that's been interesting, I should mention, is that we measure the contango or backwardation between the front to near month futures relationship. That has come out of a long period of hovering around the end of this gauge. So we've been in the 14 to 20% contango range for months. Sometimes even buried the gauge and gone over 20%. So what's changed recently in the last week or so, even less than a week maybe, is that we've been hovering in this -4 to 0 range. We've even gone into slight backwardation, and the futures remain, in that 0. So what that means is that if they go into backwardation, it's going to pull. It's a tailwind for things like UVXY and VXX and can get volatility moving very, very quickly. The volatility ETFs, ETPs, things like that can get them moving very, very quickly because it adds a roll yield to those products every single day. So not only will they be going up because the futures are going up, but they'll be going up because they have this tailwind of the added roll yield, which they normally lose when it's in contango. Okay? All right, let's move on very quickly to, actually, since I'm on the volatility space, I'll talk about the block trades at the end. I'm going to have a short word about volatility here, okay? So this is the VIX daily chart. To see where we've been in terms of volatility, this is the beginning of, this last high is the last candle of 2016 on the December 30th, okay? So we've almost every close, you'll see the close, because of the candles, almost every close for all of 2017 so far has been under 13. We've had one close, which is here on the 23rd, above 13, and I think it was only like 1310 or 1311 or something like that. It was very, very slightly above 13. So this has been a long period, this entire period, first quarter of, we had a pop here, but you can see it's a red candle and that's your close, and it closed well back down. So, and that was on the 27th. So we had a pop in volatility, we had a drop, we had a lower high yesterday. So the volatility space is extremely muted, and having this long period, I mean, really, if we count back to our last volatility pop down in November, this was around the election time, we've really, it's been like November, December, January, February, March, 5 months of low volatility with low VIX closes. And so what I see, in the Twitter sphere and a lot of blogs and a lot of people commenting online about volatility is that the VIX is gamed, the VIX is rigged, and the VIX is smashed. You see on places like Zero Hedge, they smashed the VIX again, and they did all these things. And to me, I mean, look, I'm not a pedantic guy really, but I think that's a little bit trying to sell a news story, because really, if you look at the calculation of the VIX, how it's calculated is based off SPX options, and particularly weighted towards out of the money strikes. So and those out of the money strikes have to have bids on them. So what's happening now is that because the VIX index is based on options from something else, meaning the S&P, particularly out of the money puts, which would drive the VIX up. So if people are buying a lot of out of the money puts on SPX as either a outright play, thinking a big move is coming, or as a hedge for their longs, they're getting cautious about their longs. then the VIX rises. So the VIX not rising is simply a reflection of the fact that they aren't doing that. They aren't buying large numbers of puts on SPX generally. So I don't know that it's that accurate to say that they're manipulating or smashing something by simply not buying something on another index. Is that fair? Probably not. So that's why that's one of my market pet peeves. They smashed the VIX. Well, they didn't smash the VIX. They didn't buy SPX puts. So. Now, why aren't they buying SPX puts? I'm not going to go into a long-winded explanation, but basically we've been in a low volatility environment. We went on a rally, with every down move is bought, and there's just no fear. We're in a period of utter complacency in the market. Now, we had a drop yesterday when some news caught people flat-footed, and when big players are caught flat-footed, repricing happens quickly. That may well continue today. We may have further down. Usually, after a good down day, we'll have a retrace up. Somewhere around 50%, and then we'll drop back down. So, we'll see what plays out today. But volatility is still low. I mean, we had, VIX of 13 yesterday, 12.5. We had a low in the 10s. I think 1090 was our low in the VIX yesterday before the move started. So, post FOMC release. So, the VIX mean is like way up in the 18 to 20 range. We've had low volatility for a long time now. I have a feeling that volatility is going to return very soon, but until it does, there's not a lot we can do. We just have to wait it out and try and catch. If you're playing long volatility plays, it's been very, very, very hard period to make money on the long side. You've had small pops, and then it gets crushed right back down. And certainly with products like VXX and UVXY that bleed, they have taken a real drubbing because of the roll yield, the negative roll yield from being in contango for so long through this whole period. It's been a great time to short volatility on any slight pop. Okay, so that's the whole picture. We have an overly complacent market. The market's basically saying that nothing bad can happen. I think there is actually to the point where there's a disconnect. I think anything can happen in the market, as we saw yesterday, and now we have a lot of real geopolitical risks out there. North Korea, Russia, China, name them over and over and over, and the market's kind of looking at them and yawning. But one day something, God forbid, something bad happens, but something political will happen. And nobody's priced it in. So, and that's when you get moves like this, right? This was the election ramp, and nobody had priced it in. You get things like Brexit, nothing bad can happen, nothing, super uber complacency, and then Brexit. So we're due for one of those. Usually in the volatility space, you get a move like this every 3 or 4 months. We're 5 months in, we're overdue. So watch out for the signs. Certainly rallies on flat or negative breadth are a sign, and know that we've been at historical low volatility levels. Okay? All right, I'm getting a little long-winded with this. I'm going to run through the block trades, and then that's it. We're going to leave for today, start trading. Okay, so back to the block trades. We had a very large block on SPY, 6.5 million, 234.78. So is that a buy? Is that a stick save? Sometimes what you'll see after a down move is you'll see a large stick save print. We've got a number of other smaller prints. They're still large in the millions. Around the same level, 234.78. We're very, very slightly above that right now, but it's pre-market, so it's low volume. Nothing really to show you there, other than the fact that we've got a, I'm not a massive Elliottician, but we've got a 3-wave down move here. We're probably working on a correction, so whether we make another spike low today and then come back up, this is going to be your line in the sand, though. If you can see trade sustained over this 234.78, well, stay bullish, okay? And I don't mean just a temporary drop and come back. So, you really need to see trade and volume sustain over this 234.78. We have a lot of resistance from blocks recently, so 236.26, 235.74. There's lines of block trades there that are resistance. So we poked above them, but look. Yesterday, it was interesting to watch this stuff because on price you poked above this, but there was no trading up here. No one bought. No one bought this rally. Certainly large institutions in dark pools did not invest the farm into this rally. It popped and then it dropped right back down below these blocks. So, when you don't see any volume chasing this move and pushing it up, be a little cautious. So, okay. All right. QQQ has been the monster. Certainly, definitely some distribution prints up on the highs yesterday. Lots of trades here in the 132.50 level. It's easier to see if I zoom it back out. So you draw a line across here. There's just a ton of what I would think is distribution so far on an all-time high level. We popped above. There was even more prints up here, and now we've got a down move. So we're slightly below, but we're still, in the bigger picture, quite high on the Qs. So have a watch. Definitely if we get back above 132.50, 51, 52 area, we can sustain more rally. But I have a feeling we're getting long in the tooth on this. Okay. IWM has been the most bearish. Lots of prints on the top. Big prints, which we've stayed below. 3.7 million, 136.13 or 136.14. 135.50. We're below all that stuff. So really that's resistance, and we're going to take a bearish posture on IWM, which means look for shorting opportunities on retraces as opposed to shorting the bottom, right? Okay. Volatility space, not much has happened. There have not been a lot of block trades on this recently. I think the people who bought, definitely there was a 15 million print back here. Yes, we can still see it on the gauge. It's under here, but you can see the pop-up. 15 million was a sell. We've stayed below ever since. We're popping back up. The real only print that is making anything happen, and this certainly doesn't move SPX, but somebody's making some money on it. 750K print on UVXY 1578. We came up, we came down a little bit below it, and now we're above, so we popped up. So I'm rooting for this guy. I'm hoping he makes a big stash of money. Okay, so what else has been interesting? Metal space, metals. We had a pop, we had some sells, and I think we have a decent buyback here. So metals are going to be, have to hold. GLD is going to have to hold 118.72, which is a good 1.8 million print down here, and maybe we can sustain a move higher. SLV's been a little, we had some prints up here, and we've been hovering around them, and there have been a lot of these 2.4 million prints at 17.15. We're above, but just barely. So I can't get really uber bullish until we actually make a move. But look at this long flat correction. I mean, and it's a correction kind of up. It's a strange move in silver. So if silver takes off from here, great. These guys are going to make big money. So but you may have a retest, you may actually pop lower, and we'll see what happens with those prints. But silver, definitely 17.15 to watch. Okay, I'm going to quickly show you a feature. We have stock blocks. We're looking at about 700 key stocks in the market and 100 top ETFs by volume on this side. Everything is searchable, so if you're an Apple fan and you want to look at Apple, you can look at the last all the block trades in the last 5 days. Last 5 days for all of these folks. You can search by time, you can search by volume. see where the big prints came in at what price levels, and get an idea for buying and selling, or just simply watch them in order as they come in, like today. So yeah, so we got some AMD prints, after hours, Yum. We're getting into earnings release season too, so this is a very good thing to watch your favorite tickers on a run up to earnings. If you see large blocks on a high, you know that it is likely that somebody's selling out of a big position of something, and it's likely to go down. Or if it's been correcting for a long time and you see big blocks on the low, that's generally a buy. Some fund probably knows something, and pre-earnings they're getting ready. This isn't just for earnings though. We trade off this every day, so we'll look for commonality, large blocks at a certain price, and then just be bullish above and bearish below that price. Really great early warning system for a lot of things. So searchable, sortable. You can see all the blocks on volume on anything. So we've had, some of these are mergers and some crazy things like that. Big block on GE. Interesting to note what's going on in the market and what the big players are doing, right? So, okay, so that's it for today. It is April 6th. I've gone on a little longer than I wanted to. So have a great day. Good luck trading today, and we'll see you soon. Bye-bye.